let's have a look at the US dollar index chart. This chart shows us the dynamics of the American currency versus currencies of America's 6 main trading partners. Firstly, let's have a look at the weekly chart of this instrument. We can see that during the year of 2016, the US dollar index broke important resistance level in the area of 100 points. To be more precise, it's 100.50 mark. And then above this level is now acting as support. As long as the US dollar index is trading above this mark, the overall outlook for the greenback is bullish. But taking into account some fundamental factors, the odds are that we will test this support level once again. On the daily chart, we can see the picture in greater detail. We can see that the US dollar index broke below the short-term support line, which is in place since November of 2016, and is now trading below this support line. This support line has now become a resistance line and is going to limit the advance of the US dollar index on the upside. The main resistance is located near 103 points, and further resistance will be at 103.50, 104. Return above 104 mark will surely mean that the bullish trend in the US dollar is going to continue further, and that we will see further highs of the American currency. For now, we will have resistance at 103, and we remember that support is located around 100.50. These are the main levels to watch for the US dollar index. And even if you don't trade this instrument, US dollar index, still it is an important indicator of how the American currency is feeling generally at the market, because it kind of sums up the information on dollar's strength or weakness versus a variety of other currencies, and not just one particular currency like the euro or the Japanese yen. We know that the picture for these different currency pairs may be different, and if we have a look at the US dollar index chart, we can have a bigger judgment on the US dollar, and it is a valuable judgment, a valuable source of information for our Forex decision making. So we can see that the American currency has some barriers on the upside and on the downside. Perhaps I can say that the obstacle on the upside is closer to the current market price, and there is more scope for the movement to the downside before we hit some serious support level at 100.50 points here for the US dollar, and let's bear this in mind. Also, we will start our fundamental talk with the US data, as the US dollar plays a big role in practically all Forex measures. So it is quite logical to start with American economic data and American economic background. Let's review the recent data releases from the United States for us to know what American economy has shown us at the beginning of this year, when some of us were on holidays. So last week there was a release of America's most important labor market indicator, US non-farm payrolls. This is one of the most watched Forex indicators, and of course it is very important for the US Federal Reserve, and because of that it is important for all of us who trades the US dollar. As it is in December, U.S. economy gained 156,000 jobs. This is a smaller increase in jobs than they saw in November. Back then it was 204,000, as you may see on this chart. Still, 156,000 is a rather decent number. And if we look at our labor market indicators, we can see that average hourly earnings rose in December by 0.4%. Versus the forecast of 0.3% increase. And actually, this is the highest wage growth since 2009 in America. And these figures are really impressive. High wage pressure means that inflation expectations in the United States will rise. And this is the main factor why this non-farm payrolls release for December was positive in the rise of US dollar traders. We can see that unemployment rate in America increased from 4.6% to 4.7%. Still, traders were not discouraged by this news, as it turned out that labor participation rate has also increased in the United States, and as a result of more people having desire to get a job, this unemployment rate increased. So basically it doesn't represent a negative development, it's still a positive development, meaning that the size of the US labor force is increasing. And all in all, these US labor market figures were quite positive last month, and they are in line with the path chosen by the Federal Reserve this year, the path of raising interest rates. I remind you that in December, the US Central Bank raised its benchmark. And this rate hike was the first one in 2016. And the Federal Reserve members expect that they will raise rates 3 times in the year of 2017. Of course, these forecasts of the Federal Reserve members are not obligatory for them, so they don't have to increase rates 3 times if they don't feel like it. It's just how they view the situation, what they think will happen. I can remind you that the FOMC members' forecast for the year of 2016 didn't came true. They expected to raise rates 4 times in 2016, but actually did so only once in December. So these are just the forecasts. If we look at other US economic releases which took place during the past week, we can see that manufacturing and services PMIs by ISM were positive. They actually stayed at the highest level seen in a while, and this surely brings some confidence to US dollar bulls, because these manufacturing data represent the latest take on the US economy, the latest available data which describe the state of American economy. We also had factory orders and trade balance data for November. Here some discouraging results were published, but once again November was rather far away. And the newer data are better than this data we had back then. So this data didn't discourage US dollar bulls much. So all in all, as the year of 2017 has started, we have a rather positive background for the US dollar.